Thank you for tuning in to TalkWad.com, the world's fastest growing internet radio network. Please check out all the other great shows on www.talkwad.com.
What if your customers are trying to find your business online, but instead of finding you, they find your competitors? Now, more than ever, it's time to make sure you have the right SEO to make your business stand out online. Welcome to Go Mind Your Business with Terry Bork, presented by Extreme Marketing Concepts, putting your business in front of the hungry herd of buyers who are looking for you right now. Extreme Marketing Concepts, helping you drive more traffic, dominate the market, and crush your competition. And now, here's Terry.
Hello, everybody. Welcome to another edition of Go Mind Your Business. My name is Terry Bork with Extreme Marketing Concepts, and I am super pumped to have everybody join us again today down here at the TalkWad Studios, and we are part of the All Your Business radio show. Today, my very special friend and very special guest, Frank Arts, is going to be joining with me. Frank, welcome to our program.
Thank you, Terry. It's great to be here.
Yeah, it's my pleasure to have you. Frank is a CPA here in the Carrollwood area, and an amazing individual. So I'm really happy to learn all about Frank and how he can help us during this tax season, most specifically. But let me tell you a little bit about Frank before we just dive into all the good stuff, okay, Frank? Frank is actually, again, a CPA. His firm is called Frank Arts Tax and Accounting, LLC. His business is located here in the Carrollwood area, and his doors have been open for 4 years now. Wow, time goes fast. Okay. He has been a staff accountant, a senior accountant, an account controller, a comptroller. Basically, you've just been an accountant your whole life. And if you weren't an accountant, you were learning how to be one.
I would not know what to do.
Okay, I got that. Frank is married. His lovely wife is Angela. They've been together for 16 years, and they have a beautiful daughter, Natalia. She's 11. And Frank enjoys golf, maybe.
Sometimes.
when the clubs cooperate, right?
They
Frank?
never do. They don't
Okay.
listen. They listen to profanity sometimes.
Oh, okay. And they do that, right? At least they don't talk back. And Frank really enjoys working out so that he can get his mind off tax and money and numbers. And he enjoys working out with a lady who has a show here, by the way. Her name is Carol Ann. She's a great trainer. Frank's burning desire is to grow his practice to the point where he needs a receptionist so that he doesn't have to take the calls. He can pass the phone on to somebody else. That's a great goal, Frank. That's
and
awesome.
the calendar, too. It's not on there, but the calendar and the phone.
Got that. Okay. And he has learned how to be calmer in his more adult life, I guess. It's a good thing to share there about Frank. And the keys to Frank's success is that he holds himself to a higher standard than anyone expects of him. And I can truly tell you that is absolutely correct. He does hold himself to a very high standard. I deeply respect Frank, and he does definitely go the extra mile above and beyond anything I've ever asked of him. So it's so great. And
Thank
I know
you, Terry.
just strive to make everybody so happy.
Thanks.
In all sorts of things,
Yeah.
you know? So it's a wonderful thing. So I do want to, again, welcome you to our program today. It's great to have you in 4 years. That's wonderful. Congratulations
Thank
on
you.
that. That's always your feat. Yesterday we celebrated our 3rd anniversary, so it's neat crossing over that beginning your business hurdle.
I remember that very well because you and I started about the same time.
Mm-hmm. Yep. So it's really exciting, to get past your initial 2 years, I guess, as a small business owner, and get into that 3rd year and go, oh, I hope the hardest part is over.
For me, it was a little different. It was more like I wanted to serve a need.
Uh-huh.
So it really wasn't about achieving a certain level of success. It was really just finding my niche,
Mm-hmm.
finding where I was comfortable, and that was in helping people. So I just started building the practice around helping people in need,
Mm-hmm.
and it just grew to the point where it is now. And I just keep that mindset of just, if I can help somebody, then those are my perfect clients, and so then I'll just help them.
Right.
Even to my own detriment, because it's about time.
Uh-huh.
And if I can spend a little more time and help people out, then I get a great deal of job satisfaction out of that. So that's
awesome.
Kind of how I just built it, and then whatever else happens. That's the way I look at it.
Well, I remember our beginning days, and
I remember
kind of hanging out, going,
we need some business here.
Remember hanging out with you one day at a Cadillac dealership, I think was...
that's the one that comes to mind.
Right? A great networking organization with the Business Journal, I think, puts on some really great events, and it was really great getting out there. And there's other great networking organizations in the area that I know we're both a part of, and thank goodness for that, because where would we be without referrals?
If we could bottle it and sell it, we'd be even more wealthy than we are now.
I get that. So you're a CPA. So what exactly, Certified Public Accountant, what does that exactly mean? What do you do?
Well, Certified Public Accountant is licensed by the state of Florida to practice accounting.
Okay.
And what they're able to do is they are able to either do audit, which I don't do, but auditing is a profession where the professional will come in and examine the books and then issue a statement, an opinion on the statements, and hold themselves out into third parties and to the companies that the financial statements are presented in fair presentation, okay, without getting too technical. The other side of that is the tax. We're allowed to prepare tax returns, and then we can do a odd assortment of other things that you might need a CPA for to verify income through divorce proceedings, things of that nature. You might want somebody with a higher level of qualification to pass for legal work, things of that nature.
Okay, I totally get that. Okay, so then really, what's the difference between a CPA, accountant, and tax prep person? I mean, if you just want your tax prep done, I mean, can anybody just go do that for you? Or, I mean, that's kind of scary.
It's true. Anybody can. This is not to knock the H&R Blocks and the Liberty Taxes of the world. They are really good people, and they're really good, provide a great service. But for them, they can hire anybody off the street, put them through their training and their courses, and bingo, now you've got somebody that can prepare your taxes. Whereas with myself, I'm a certified public accountant. I have to maintain 80 hours of continuing professional education every 2 years. Most of that I focus on tax, and I keep up to date all the time with the tax laws and the tax changes. And it's a matter of comfort, So like I said, the H&R Blocks and the Liberties of the world. If you have a really simple tax return and you're shopping for price and you want to find the lowest price, you can go there and you can get a job well done. If you have a more complicated return and you want somebody with more professional expertise and you want to know that they're getting it done the right way and you want the same person year in and year out, then you should hire a CPA or you should hire another accountant that has qualifications. There's also another qualification called an enrolled agent. And they can help just as well because they have to pass a very rigorous exam to be qualified by the Internal Revenue Service to prepare tax returns. So it's not just CPAs, it's enrolled agents as well that can also help in this regard.
I got that. It's funny because you say, the H&R Blocks of the world, they might be less expensive. I actually don't find that to be the right comment. I think they're more expensive because they charge you per piece of paper.
Yes, they do.
So that could be more expensive if you're a business or you have all these, taking something other than your standard deduction, and you got all these other little pieces of paper. You got a kid, you got this, you got that. That could all add up to hundreds of dollars. So you might be just spending extra money and not even getting the right representation or the right deductions that you need.
Yep. I've seen the gamut of it all. I've seen the people from H&R Block. They have really good returns prepared, and then others that are just like, wow, what happened?
Right.
And I see that all the time. But it's really the luck of the draw. There's even been some people that have that do it themselves.
Oh, that's a big mistake too.
And I get that all the time when people ask me, should I do it myself or should I hire you? And so the answer is, what kind of return do you have? Is it simple or is it complex? So then they ask another question, what's a simple return?
Right.
All right, and if you go out and you buy TurboTax or any of those tax pro products off the shelf, it has a very thorough interview. Okay, a lot of yes or no questions, a lot of just follow the form, put your information in, and out pops your tax return. Along the way, if you can't answer any of those questions, then your tax return is complex, and you shouldn't be doing it yourself.
Right. Got that. So yeah, if you're the kid and it's your first job and you're making you made
you bring up like the biggest mistake that's going on out there.
Oh, I'm so excited! I did. Yay!
You did. I get this all the time too. Is I have a lot of families that do their tax returns, and I get the children's returns as well. And what'll happen is, as the children grow up and go off to college, they get their own job, a little part-time job here on the side, and you might be in the same category because your sons and daughters are running off to college now.
Mm-hmm. Yeah.
So what they'll do is they'll get a little part-time job, work a little bit throughout the year to give them some income,
Mm-hmm.
and then rush out and file their tax return to get a very small refund. In the process, they'll ruin the dependency exemption that you would rely upon, the parents would rely upon.
Mm-hmm.
So to get a couple $100, they blow their dependency exemption on themselves. It doesn't even help them get that refund, and then the parents can't claim them as a dependent. Yes.
That's really frightening.
Yes.
Because that's all we got left.
That's all you have left. That's it. So what I always tell my families to do is make sure that you let me do their return. I usually throw those in for free because there's usually it takes like 5-10 minutes.
Right.
But it saves them so much time.
Uh-huh.
And right now I have 2 people that are in that same exact boat. Their kids went off to college, they worked a part-time job, they filed their return, and now they can't file electronically.
Mm-hmm.
So the solution is the child has to go amend their return, wait 45 days for the IRS to accept this and respond, and then the parents can file.
Oh my gosh! In 45 days now, we're cutting it past April 15th.
Yeah, so they need an extension. So now it goes.
So then that costs even more money.
You see how this small little problem, this small little refund, just compounds itself.
Right.
And this is not even a major. This is not even what we're talking about here. Is not even a major tax issue. This is just protocol. This is
Right.
just
Well, this is great tips because we're just folks. We don't know this stuff.
Right, and that's what happens. It's a very innocent mistake. A couple $100 for a college kid goes miles because they could stretch the pennies.
Right.
But meanwhile, the parents are back home shelling out most of the support for the
Right.
child.
And we're like, that's thousands of
That's
dollars.
my
that you just
money.
lost.
That's mine. That's
You wanted your
exactly what they go
$50.
through.
Right. I would have sent you the $50. Right?
And that's what I tell the parents to do. I tell
Right.
them all the time. I said, if it's a difference, of them claiming they're dependent versus not, then write them a check for the difference. If it's $25 or $50, write the child the check, send them
Right.
on their way, get them back into school, and then you enjoy the thousands of dollars coming back to you and your refund.
Wow. You know what? I never even would have thought that. So I'm really glad we brought that up.
Yeah, it was just a coincidence.
I know. Okay. Well, then, I will definitely make sure that I inform everybody I know who has a child because a lot of them, we're all parents and our kids are hanging out, working in the bookstore, helping to offset
That's
some
right.
of those costs. It's so expensive.
Yep.
So how do you choose a CPA?
You choose a CPA based on your comfort level.
Mm-hmm.
All right, with the thing I always start with is trust.
Mm-hmm.
Right? You have to be able to trust the CPA. And for me, you could not hurl a greater insult at me than to tell me that you don't trust me. You can call me all the names in the book. You can drag my name through the mud. You can threaten to harm my family. That really wouldn't bother me. But when you tell me that you don't trust me, that implicitly, because I have access to everybody's social security numbers, their bank accounts, everything.
Right.
For someone to tell me that they don't trust me, I take that like a grievous insult, like you would bring me to my knees and make me start crying because I feel so bad about myself. But so it starts with trust, and then it builds up to a comfort level of does that person make you feel good about the meeting? When you meet him, do you feel confident, okay, that you're going to get what he or she told you is going to happen? Are you going to get it? And then from there, you just have an interview. How do you work? What are your processes? How do you get the information back to me? Is there a refund? Do you electronically file? The whole 9 yards. You're actually conducting an interview for based on trust and reliability.
Right.
So if you can't get those feelings, I call them the warm fuzzies. If you don't get the warm fuzzies from meeting with your CPA, and I know that's kind of an oxymoron, CPA warm fuzzies, because most of the time we're very stereotypical. Hide behind the computer and put the little cap on and put the little lamp on But you have to have that kind of relationship with your CPA for it to be a successful relationship. Mm-hmm. So that it has to be just like everything else, open communication, constant access, and reliability. That they're experts and they will do what they told you they were going to do.
I totally get that. Awesome. If you're just joining us, we are speaking with Frank Artz. He's a CPA here in Carrollwood, and you can visit his website at www.frankartz.com. My name is Terry Bork, and we're going to take a quick break and have a word from our sponsor, and we'll be back in just a moment. Our sponsor today is Extreme Marketing Concepts. And businesses today usually have one of two problems. Either they have an excellent reputation and nobody knows about it, or they have a terrible reputation and everybody knows about it. Extreme Marketing Concepts can help you with either one of those problems. Give them a call at 813-863-1452. And we'll be right back after this commercial break. Hello again, and welcome to Go Mind Your Business. My name is Terry Bork with Extreme Marketing Concepts. Today, my very special guest is Frank Artz, Frank Artz CPA, and you can visit his website at www.frankartz.com. A-R-T-Z is his last name, A-R-T-Z, frankartz.com. And if you have any questions, Frank is happy to answer your calls, and you can reach him at 813-748 9973. So we're talking today about tax stuff, So let's talk about home-based businesses for a minute. There's so many entrepreneurial people here in the Tampa Bay area.
Yes.
Is a home-based business right for people to start up?
It can be.
Okay.
It can be. Home-based businesses, you have to approach it from the mindset that it's right out of the gate. You and I are both living proof of this, that it's not going to fulfill all of your financial needs immediately. Mm-hmm. Not unless you're Bill Gates or Steve Jobs or somebody like that. If you have a concept and you want to make it into a business, it's going to take a lot of work. Mm-hmm. It's going to take a lot of time. And the return on investment is not going to be probably what you expect going into it.
Right.
So it's very wise to have a secondary source of income. And that's why people typically work a full-time job and then go to work on their own business in the evenings or on the weekends. And it becomes this all-consuming process to start putting distance between the regular job and the new job so that the home-based business can then come on in and take over. But it is an arduous process, and it's not for everyone. I mean, there's all kinds of business problems that can come up that are unforeseen, not just beyond cash flow, just managing other people, acquiring assets, acquiring space like this, or any type of facility involves just dealing with it. There's no science to it, but just the sheer volume of things that go on in a business may not be so apparent in the beginning. So when you're planning a business, lower your expectations of what you can expect and then work hard to build them to where you need them to be. I guess that's what I'm trying to say.
Okay. That's terrific. I find it sometimes confusing as a business owner to know exactly what business records I need to keep for my business. Do I take this one? Can I make a photocopy with my phone, take the picture? Do I need to keep a file for every single item I buy, every scrap of toilet tissue I purchase, every purchase I make for whatever? Well, you tell me. And I know we could talk about that probably for like 30 hours, but as a general rule of thumb.
The messier you are, mm-hmm. the bigger my invoice is.
Cool. Okay.
That's the way it works. But what will happen is I will meet with everyone and determine their comfort level, their ability to produce and keep their own accounting records. Mm-hmm. I get a lot of people that come up in front of me and they say, I need QuickBooks. I want to buy QuickBooks. And I ask them, well, are you an accountant? They go, no. Have you ever seen QuickBooks before? No. So why do you need QuickBooks? So what are you going to get out of QuickBooks? What are you going to become this accountant inside of your own practice? Mm-hmm. Do you need to hire someone like myself to do the QuickBooks for you? Do you need to hire somebody else in your family? Because maybe the time requirement for them would be much smaller than yours. Where is the greatest value of the person's time in applying the concept of accounting within their own practice? Mm-hmm. So, for example, like you just asked about business records. What records do you keep? You need to keep all of your receipts. You really do. But if you hand me, I was being facetious in the beginning, but if you hand me the shoebox full of receipts, I am going to charge you more to go through those and look through them. Anybody will. It's not just me. If the more work we have to do, the higher the invoice is going to be. It's a matter of cost benefit for the client. For people in the QuickBooks versus not QuickBooks mode, it's dependent on their business. You know, how active is their business? How many transactions are there? I mean, is there a business that has like small little retail items that have to constantly be sold and monitored all throughout the year, and they're going to have constant credit card transactions? Then yeah, they probably will need QuickBooks, and they will need some training, they will need some support. But if you're talking like somebody who might buy and sell large pieces of furniture, you know, there might be 1 or 2 transactions a month in the beginning. Do they really need this full-blown huge program? Probably not. They can get by with doing it themselves, either in Excel, which I can show them how to do, or they can go to the store. This is the most common one I run into when people are not tech savvy. They don't have the time for QuickBooks. It's called the Dome book. Okay.
The Dome, D-O-M-E,
Dome? D-O-M-E, Dome book.
Okay.
And what it is it comes in various calendars. So you can have the weekly Dome book, you can have the monthly Dome book. And what it does is it requires you to write down your transactions by hand.
Okay.
But it's been very effective at creating discipline within an unorganized situation. Because you keep track of all your expenses, and then they roll forward to the next week. Mm-hmm. And then it helps the business owner understand, because they're doing it constantly, because they're running through the totals all the time, where are they spending their money? Where is their revenue coming from? If they don't have a good, you and I are different breeds, so we know where our money's coming from. We know where it's going. We have different mentalities.
Right.
But most people in the world manage their business from their checkbook. They say, Frank, I either have money, I say I'm making money because I have it, or I'm losing money because my bank account's low. I get that all the time. The Dome book will help them identify where it is. Okay, where is it going? Mm-hmm. It's got the grid. It's got the categories. Mm-hmm. And what you can do at the end of the year, you hand this to your accountant, and that's how the basis of your tax return is prepared from there.
Okay. Now I'm just looking. My producer just brought this up. So this is like the thing that they can fill out, this record-keeping book.
That's it.
The Dome book. Thank you very much, Nolan, my producer. Just pulled that up for us.
Can I ask a question?
Yes.
What's the difference between because I'm looking into the Dome books for our business here. What's the difference between the beige and the brown?
I can't see the picture.
Oh, you can't see it on there?
I see it, but I can't read it.
Oh, okay. Yeah, I didn't know if there was because I know that our CPA here told me to go. I thought he said get beige, not brown, but I don't know. So.
I think the difference, if I'm straining my eyes, it says monthly versus weekly. So it depends.
I understand. Okay.
It depends on how frequent you sit down to do your own accounting records.
I'm the shoebox kind of guy.
Yeah.
I don't stick them in a shoebox though. I just stick them in my shoe. Hand in my shoe, and so my invoice is very large.
Yes, it is.
So.
Okay. Awesome.
But that would help you get structured.
Yes.
And I think for you, because I'm familiar with what's going on around here.
Yeah.
That you need the weekly version.
A weekly version?
You need the weekly version, because that way you're keeping track of everybody coming in and going, and you have expenses of your own that you have to keep track of as well.
Like taking Terry Bork on lunch dates every day.
I was about to say, your entertainment expenses must be enormous.
There we go. Oh, I like that. We're going to go take a lunch. Okay, sweet. No, that doesn't happen.
It should.
Oh, yeah, we're going to have to do that. We can write that off. My accountant over here told me so. No.
Well,
if we bring him, does that count if we bring you on a lunch? No.
You can't do it together. One of you gets the deduction, not the other.
Oh, drat. Okay. That's fine. I guess there's 3 lunches now.
Terry, if you're paying, you can have it.
Oh,
you
okay.
Can have it.
If I'm paying. Got it. Okay. So I appreciate you bringing that up for us. Thank you, Nolan. And great question. Thank you for the additional feedback. Appreciate that. Okay. So we're talking we're talking about records. So we're holding on to all our records.
Yes.
And
you got to hold them for 7 years.
7 years.
But if you have payroll, that's another issue that comes up is payroll.
Yeah,
People in the home-based business, people always ask, well, how do I pay myself?
Mm-hmm.
And the letter of the law says that you can't, in the state of Florida, you cannot own a company and be an employee without paying yourself. So you have to be an employee of your own company. I'm sorry that came out a little all jumbled, but I'll try again. You have to be an employee.
Okay, so you have to get paid somehow. So you have to take some sort of revenue out of your company and put it in your pocket.
Through a formal payroll system where you remit your unemployment taxes, your FICA, to the various agencies.
Okay.
That's what's required. The federal government wants you to do that, and so does the state of Florida. But a home-based business in the beginning doesn't have that kind of cash flow. So it's very hard to make this come to being.
Right.
So what I always advise my clients to do is to just bide their time as the business builds. Mm-hmm. There will come a point in time when the profits of the business, not the revenue, the profits of the business become enough to substantiate an annual salary. You get to the end of the year and they have like a profit and loss statement. They have net income $30,000. Okay. That's pretty much just an annual salary that they've created from their business. Mm-hmm. And it's going to go on their tax return. There's going to be no tax taken out of it. At that point, they have, if they can rely upon this type of activity in the future, then they should start a payroll system at that time, a payroll process. I don't say a system, a payroll process where they
so it might not happen the first year or two where they won't have a payroll process, but once they're getting year 3, year 4, year 5, maybe year 10, I don't know, it depends on how long they can not have an income, then that will start. So it's okay in the very beginning not to have one.
Exactly. It is because, and the state won't like me saying this, but once you start reporting your payroll, even if you report zeros, okay, you can report zeros forever, but you have to start this process into perpetuity. There's no end. So if you don't have a payroll need to pay yourself, you don't have employees to pay, and it's just you working on this business, then why start another administrative process that does not add value to your business? Mm-hmm. Okay, why go through this every quarter? Oh, okay, I got to fill in my payroll reports. There's zeros, and they go off, and then the agency comes back and says, "Oh, they're wrong." How could they be wrong? There's zeros.
Right.
There's nothing on them. So you create this headache for yourself just trying to comply with the regulations, when in reality it's better, okay, I'm not paying anybody right now. I'm not even paying myself. Let's wait until it comes time. At that point in time, the business is more mature. There's more cash available to handle this extra expense that has to happen on a regular basis. And then from there, you don't have to take a full salary. You have to take a reasonable salary. Mm-hmm. So as the business builds, you don't have to max out your salary at the business. You can just follow it step for step as it grows. Okay. And that way, you're not placing an undue burden on the business of lumping your giant salary on this thing, and it causes cash flow issues. Then you run into overdrafts on your bank. Then you have issues with the state, like I said, with all this. So it can become a nightmare if you don't handle it the right way. And jumping into that process right here in the beginning is one of those unforeseen circumstances that most business owners don't see coming and don't really need to get into. It's like a landmine that they can easily just walk around.
Got it.
And just keep right on going and do what makes them the money. Mm-hmm. Be the business owner that they should be. Don't worry about being the accountant, the administrator. Go run the business. Don't worry about the stuff in the beginning. Okay.
Perfect. I'm always quite curious. From a business owner standpoint, right now, let's say at this business owner side of things, meals, entertainment.
We were just talking about that.
Yeah, well, a little bit further. I know we were kidding around with it before, but let's really get into that just a little bit. What can I take? How many times am I allowed to go out to eat? Can I take my clients all the time? Can I take my family and say it was a client? I don't know. I don't know what can be done. I don't want to get you in trouble. I guess it always has to be the client. And
first of all, there has to be a business purpose.
Okay, so we just can't go out because we want to go to, Panera's and have lunch together and talk.
We shouldn't.
No, but if we go to talk and we're going to be talking about, I have a question on my taxes. Can we get into that and we talk about something related to business?
Yes.
Then that's okay.
Yes.
Okay.
Yes, but okay, when you get into that situation, having fun. So
I know we're enjoying ourselves.
You see the smile is starting to come out now, and then I'm really starting to get a little loose here.
Okay, good.
So the way the law reads, there has to be a business purpose for the meals and entertainment, and there has to be documentation of this event. So not only do you the receipt is not good enough. Right? If you go to Panera, you swipe your card, you buy me your Nolan lunch,
cup of coffee,
whatever, $20. That receipt's not going to hold up. So you have to document on an expense report that you met with me at Panera on a certain date. You spent this amount of money, and we talked about a topic, whatever it was, whether it was business tax or marketing promotions, social media, whatever it is that we're talking about, it has to be on that sheet for every time you do that, for every single person.
Okay, right, because if an audit happens,
that's your proof.
I have to be able to prove what I talked with you about on March 6th, or whatever today's date is, and I think it's the 6th.
It is the 6th.
Awesome. So on March 6th at 12:30, we were speaking about what receipts I needed to have to prove my lunch with you today. Not that we're having lunch right now, but
I know.
But then they can say, "Oh, okay," and then they'll accept that. Then how much of that can I write off? Can I write off the entire lunch?
No, only 50%.
Okay, so if my lunch is $20, I get 10.
Right, and in your books, in your system, you put it in at the full cost and let your accountant take out the other half.
Okay, so he'll be able to figure all of that out.
Okay. There's a difference though in the meals too, because there's different sizes of staffs and different types of organizations. So where you and I would have a meals and entertainment lunch that's built out at 50%, there's other people that might have like a staff of 10 people, in the office, and everybody's working on this project at the last second, and then the boss says, "You know what? I'm buying lunch today. I'm calling in the caterer, and here's the catered lunch." Okay, that lunch there is 100% deductible, strictly because it's for the benefit of the employer. It's not for entertainment purposes. It's not so.
Oh, okay.
So he has to keep the machine working because everybody's got momentum. He doesn't want to see it stop. He doesn't want everybody to go in like 10 different directions and then try to come back and rejoin. He might say, "This is too important. Lunch is on me. Here comes the caterer." Boom. That's 100% deductible.
Okay. Oh, that's helpful to know. Okay. Now, how about gas and traveling to you and from your appointments? Can we still take stuff like that on our taxes?
I always recommend mileage.
Mileage
over the actual. So self-employed people, this is where it goes in self-employed, is that especially a home-based business. If you're at home, then every trip that you're making is pretty much a business trip, whether you're going to the post office, the bank, or whatnot. So when you include a gas expense, like if you try to incorporate a gas receipt into your business, that also takes into that gas also includes picking up the kids from school, going to the grocery store, or ancillary trips that are not business related. So then having the client split that. Okay, well, what part of this gas is business? What part is personal is not practical.
Okay.
So the more practical approach is the mileage.
Okay.
And this is I recommend this all the time. Is that people keep a little pocket calendar in their car, and when they're going on a business trip, whether it's we'll get into that in a minute, but if it's a business trip, write down the miles, the date and the miles that you traveled for that business trip, and that will become your documentation in the event that you ever get audited. And then for there, you get 55.5 cents a mile as an expense deduction through your business. Your expense can then write you a check. That's an expense to the business, but it's not income to you personally because it's reimbursing you for the use of your car.
Okay.
So that the mileage calculation actually covers not just the actual gas, but the wear and tear on your car as well. Mm-hmm. So there's a calculation in there so you actually make out better in terms of the mileage versus the actual receipts.
Got it.
So that's a very effective way to get money out of your business without it becoming income to you.
Okay. Got that. So we can, trips to your BNI meeting, trips to meeting with your clients, trips to anything that's related to bank or post office for your business.
You're running your business through your car.
Right. Write it all down. You get in, put the mileage down, and get out, put the mileage down.
Yep.
Got it. And if you're stopping off for somewhere personal, deduct that.
You just don't count it.
Don't count it. Okay. Perfect. That's great. How do you prove travel and entertainment?
Same way.
Same
way with through the expense report, just like we went with the meals and entertainment.
Yeah.
The 50%. You can typical expense report has all that, like in like a. You can get the templates from Word or Excel or anywhere out there that you can find them. It just has names, meals, travel, hotel, airfare, rental car, stuff like that. It's usually all on one template.
Got it.
And you and I here, we're local, so it's mainly just meals and entertainment. And rarely do I take a trip anywhere. I mean, everything that I do is right here.
Sure.
But there are people that travel for their work, and they might have to attend a seminar. They might have overnight stays. And the hotel and the travel, that would be 100% deductible as long as there's a business purpose. And as long as it's within reason. Okay, so I get this question all the time. The people want to take this giant cruise and count it as a business expense.
Well, right. There's the Marketer's Cruise every year.
Right.
Okay.
That's
what it's called. It's called the Marketer's Cruise, and marketers go on it.
Right. And the way that's supposed to read is that it's supposed to be every, full cost of the cruise is not deductible.
Right.
Only the cost that's business related. So that's where the gray area lies. So where is the formula that determines what is business versus what is personal? And this is where people get in trouble because they'll throw in most of the cruise and whatnot. But you have to make a reasonable assumption of, okay, a part of this is a write-off, and you can make it a wink, nod, shake. We can make it an aggressive write-off, but don't go all in on the cruise. All right, don't go for the full enchilada because then that's where you're crossing the line. So there is those arbitrary things where how do you extract out of it? If you sit in a 4-hour seminar, 3 hours a day, how much of that cruise is allocable to business? How much is allocable to personal?
Right.
Who knows?
Because there's the networking that happens.
Right.
After,
exactly.
And because you're on that boat, you can't leave the boat because it's water surrounding you unless you're at an island.
You're constantly working, right?
Right. Yeah. Exactly. I like the way your mind thinks.
Yeah. When it's funny because I do take a lot of cruises, and then once people find out what I do, guess what we're talking about?
Right.
Tax. We're talking about tax and everything else. It doesn't escape me, even on vacation.
You can't even enjoy a margarita or something by the pool, right?
Yeah, I get that. Hey, I got this question. Oh, really? What are we talking about? Oh, tax. Oh.
I don't know anything. I know nothing.
I'm on vacation.
But you're not then, because then you can say, "Ooh, I can deduct this cocktail by the pool."
Meals and entertainment.
Right, it's a meal.
Yeah. Good luck explaining that one to the IRS.
Yeah. I'm kidding. So, we talked a little earlier about, one of the biggest mistakes that kids are making with taxes and stuff. So can we talk about maybe a quick one before we have to go to another commercial break?
Could we tease something else, maybe?
Yeah.
How about we tease short sales?
Short sales. Okay, let's talk about short sales. We have a few minutes.
Okay. There is, it's been going on for the last 4 years. Okay. People have been having their houses short sold, and the process is not very pleasant.
Right.
So in the end, once this process is complete, they get a 1099-C, 1099 cancellation of debt. And it freaks everyone out because there's a big number on it, usually about $200,000 to $300,000 of debt that's been forgiven, and people are under the assumption that they are on the hook for all of this income.
Right.
And that's the tease. I'll explain later if we have more time.
Do we have more time? We can talk about it now, or should we take a break?
Let's just take the break in the middle.
Okay. Right. You are listening to Terry Bork here on the excuse me, Go Mind Your Business, part of the All Your Business radio show. I am speaking today with Frank Artz. Frank is a CPA here in the Tampa Bay area. If you have questions about tax, give him a call, 813-748-9973. He's happy to answer any question you might have, or you can visit his website at www.frankartz.com. We'll be right back after this quick commercial break.
The west central coast of Florida has an amazing music scene. Festivals, clubs, special performances, and there's always a lot of live music. The problem has always been getting the word out about events. Then GoTonight.com emerged on the scene. The brainstorm creation of founder Don McKeon, a Sarasota entrepreneur. We caught up with Don and his inspirational friend, Frank Papa, at the Flying Dog Cafe.
This is Frank. I'm Don. Frank is the reason that there is a GoTonight.com. He would call me repeatedly. Where are we going? Where do you want to go? Where will we go tonight?
The website has been a boon to many small clubs. So next time you find yourself asking, where will we go tonight? You've got the answer.
And welcome back to Go Mind Your Business. My name is Terry Bork with Extreme Marketing Concepts, putting your business in front of the hungry herd of buyers who are looking for you right now. My very special guest today again is Frank Arts. Frank is a CPA here in the Carrollwood area, and you can reach him at 813-748-9973. So before our break, Frank was teasing us about short sales for those of you that had to file one and get a big governmental form in the mail that has a big, huge number for your forgiven debt on there and what they're supposed to do with it before you have a heart attack and do harm to your body, I guess.
Right.
What I guess the first call should be to you. So what can people do when they see that big number?
Well, luckily, with the over the last couple of years, there's been relief provisions in the tax return built in, and recently in the January they had the fiscal cliff.
Yes.
Remember all that hullabaloo? They extended the relief provision as well. So the way the ruling works is when you have debt that's forgiven in a short sale process, you can. What I was going to say, relieve that debt on the back of the tax return as long as it was original acquisition indebtedness. Okay. What that means is that if you have a property, you had loans that were given to you by the bank, and the purpose of those loans was so that you could live in that residence, your principal abode.
Right.
Then the debt is completely forgiven. Okay. There's also another formula called insolvency. If you are insolvent, okay, let's say you don't qualify for the original. We'll talk about that in a minute.
Okay.
Let's say you don't qualify for the first one. There's also the rule of insolvency, where you can say, okay, my debts exceed my liabilities. You don't have to be bankrupt, but you can be insolvent. And there's a formula there that looks at your assets versus your liabilities, but it looks at all of your assets, even your retirement accounts. And once you prove insolvency, to the degree that you are insolvent is the degree to which the debt is forgiven. So if you're 50% insolvent, if you're 75% insolvent, then that much debt is forgiven as well. Right? That's not so nice. The first one is the best one.
Right.
Where it's all gone. The other one is if you do file a bankruptcy, then of course that is all forgiven as well. So you're stuck. You're underwater. Your house is over your head. You can't afford the payments. You go through the short sale process because you can't afford it anyway, and then you get stuck with the income. It makes no sense for you to pay income tax on top of that. So those are the relief provisions. Where people get in trouble is when they take out the second and third mortgages and they fly to Europe on that money, or they buy the boat, or they buy the car. Right now they've got consumerism tied to their home equity, then that portion of debt that was used for those purposes is not forgiven, and you are on the hook for that income, and that should be reported on your front of your 1040 as other income.
Got it.
So that's the bad stuff there.
Okay.
But for the most
part, it's okay that they get that tax form. They just need to attach it. You can adjust it properly.
Don't freak out. Your accountant can do this. I can do this. It's a common thing that's going on right now because of the real estate market that we've been in. It's very easy to relieve it. It's not that big a deal. Don't let anyone tell you otherwise.
Okay.
It is rather simple to say, okay, the debt arose from the property.
Right.
This goes for business as well as residential. As long as it arose with the property and stayed with the property, you didn't use the mortgage for, like, if you're in business, you didn't use the mortgage from the first property to finance additional purchases.
Right.
That's where people get in trouble, where they use the leverage from one to start leveraging upwards. In that regard, the income from the 1099-C is attached to them. It is not forgiven.
Awesome.
So it has to arise with the property and stay there.
Okay.
And then once it's forgiven, or once you get the 1099-C, then it's forgiven.
Okay.
So I'm getting a little confused.
Perfect. No, you're perfect.
Right.
Any other big mistakes that folks are making out there that you want to touch on? Skittles?
Skittles. I like Skittles, but
I like Skittles too.
I don't really have anything that comes to mind. There's people do some crazy things on their tax returns. Like they hand me like their electric bills. The individuals will hand me their electric bills and their cable bills, thinking it's deductible.
Right.
And they're not.
Right.
You know?
Sure.
They're-
Well, that brings to mind, the home office. Can you deduct the home office? I mean, I hear you can, then I hear, oh no, don't do that. So I mean, you're sitting in there, you have a home based business, and you're working, you're using electric, you're using air, you're using, I don't know, computer time. Is it best not to claim that? Because
it's better not to claim it.
because you certainly don't want anybody poking around where their nose need not be.
Right. It's a risk reward deal. It really is. By the letter of the law, you can have a home office.
Sure.
Okay, but also it's the #1 audit area of the IRS.
Right.
So why do it?
Okay.
Right. So to calculate the home office deduction, you have to calculate the square footage of your house
Right.
and calculate how much of that house you're using.
So your 50 square feet that you're using in your closet where you have your computer really doesn't count as a home
Right.
office.
And then you got to prorate all your utilities around that. So how much utilities, electricity, air, all of that, the sewage and all that you use versus the calculation. So you go through this whole rigmarole to calculate this little office deduction. You get this tiny little bit on your tax return. So you went through all this work for this little reward, and then it becomes the #1 audit area of the IRS.
Mm-hmm.
And they look at it. I had a seminar on this. I went to a seminar, and the gentleman that was teaching it, he says, the reason I know so much about this law is because I wrote it for the president. He goes, if you have a home office and your wife walks in or your husband walks in, it's no longer a home office. The cat walks in, forget it, done.
Oh, then I don't even qualify, right?
No.
Cat hangs out with me all day long.
Exactly. He said, he said, and it's that black and white. It's that simple for them to come in and overrule it, and then that's why it's the #1 audit area, because they've got the authority and the jurisdiction to just go ahead and wipe that out.
So why put yourself in jeopardy's way?
Why do it?
Got it. Okay.
Yes.
So if there's there's other places where you could probably make benefit. I don't know.
Be a little more aggressive some places.
Maybe, and a little less
Right.
aggressive with your home office.
That's not the place to do it.
Got it. Okay.
And I always advise my clients never to do it.
Right. Okay.
It's not worth it. But then if they're adamant about it and they want to push me on it, then I will do it for them. But always with that warning.
You're the trained professional. We have no idea what we're doing, so we say, "Oh, we can take this," and then we go and take it. But we're telling you today, the home business office deduction is really not the one you're looking for.
Not the one you want.
No,
you
go
hear
find
about it.
something
You'll
else.
see about it in the newsprint and everywhere else. But you're just treading on thin ice.
Sure, I got that. Okay, we covered a lot of ground today, Frank, and we're just about out of time. Is there anything else that you'd like to share with us today? We have about a month left for taxes if you're not filing for an extension. So definitely, if you haven't made the appointment, I'm sure with Frank, you want to get on the phone and do that now. You can reach him at 813-748-9973. He's happy to schedule you out. I'm sure there's still a few appointments remaining that they can book with you.
The thing that I would caution everybody to do is start planning for their taxes during the year.
Mm-hmm.
People will always do their taxes now, and then they ask me, well, what can I do? At this point, the only thing you can do is an IRA deduction. And even that's limited by the choices that you made about your own retirement program throughout all of last year. So
Got that.
You come to February and March, you're out of options.
Sure.
So the time to start acting is really now, and start looking forward to next year.
Next year.
And what I like to do with a lot of my clients is I like to meet with them in the middle of June.
Uh-huh.
That's obviously the midpoint of the year. And try to pro forma their taxes for the upcoming year, trying to forecast where they're going to land, and then they can make any adjustments to withholding or estimated taxes, however they see fit.
Mm-hmm.
And it works out really well. A lot of people do it, and I scare them.
Uh-oh.
I do. Especially, in June I meet with them, and then in September and October, right in there, I get interviewed by my businesses. They want the same answers. They go, how am I going to do? How's the taxes going to land? And I always scare the daylights out of them. All right, I do. I tell them, okay, I go in there, look at their books, look at their bank accounts, and I say, you really have that much money? And they go, yeah, we do. I said, well, that's bad news, because you're going to owe a lot of money.
Right.
By the time we get to it in April and March, we've taken steps along the way. Maybe they add more equipment. Maybe they add more expense that they wouldn't have decided to spend.
Sure.
They lower their exposure, and then their tax bill is a lot less.
Got it.
In the thing. Or if they want refunds, I'll give them refunds. But we have to plan for that during the year. You can't. It's not like Harry Potter world where you just wave the magic wand, out comes
Got
the
it.
refund.
Sure, sure.
It all depends on the actions that the individual did, either the business owner or as an individual, throughout the year that impacts the tax return here at the end.
Mm-hmm. Okay, great. And you can help folks on the business side, absolutely, and you can help on the personal side, right?
That's my sweet spot. You know, I started, like I said in the beginning, I wasn't getting a whole lot of job satisfaction from my corporate job.
Sure.
I was miserable, to be honest with you.
Right.
And so I just started this with people in need. So that's people ask me, well, who do you want as a business? Do you have any sort of niche? Do you have any sort of like one industry that you do? I'm like, no.
Right.
When I looked at my roster, I said, everybody that's on my roster is people in need of help.
Got it.
So whether it's a business, a small business owner, 3 to 5 employees is perfect. Family owned and operated. Love those types of environments because I can get in and get dirty and spend a lot of time with them and get them shaped up. And it really is, it gives me a great deal of satisfaction to work with them over a couple of years and put them on a footing where they understand what's going on in their business, and then the accounting function becomes an essential part of their business, not just I got to do my taxes. Oh, I got to do this.
Right. What do you want them to enjoy coming to see you?
Right. I want to be needed just like everyone else.
Right. And we want to smile at you. I know I do. You want to smile at people when you see them in the public places doing their business networking and their proper lunch taking things. Utilizing those expenses that are okay to deduct properly.
That's right.
Got it. Okay. Well, I thank you so much for being on our program today, Frank. I had
awesome.
So much fun. Covered a lot of ground today.
Thank you. I was a little nervous, but I got over it.
No, I think you were fantastic. Again, Frank Artz, CPA here in Tampa Bay, can help you help your business. He's happy to assist you with any questions. He's got a great website with information on there. You can find that at www.frankarts.com, or you can give him a call at 813-748-9973. You've been listening to Terry Bork here on Go Mind Your Business at the All Your Business radio show down here at the Talkwad Studios. It was my great pleasure to have you join us today. And until next time, I remind you to go mind your business. Have a great day.
Thank you for listening to Go Mind Your Business with Terry Bork, presented by Extreme Marketing Concepts. If you want to drive more traffic, dominate the market, and crush your competition, find out how by visiting our website, www.extrememarketingconcepts.com. And join Terry next time for another episode of Go Mind Your Business.